Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. A bullish long white Mariposa and third bullish white soldier yesterday after the previous session's bullish closing long white Mariposa. This continued the reactionary theme against last week's weekly key reversal down and break above the bright red neckline, currently at 104.67, the small and narrow November-December 2024 reverse head and shoulders continuation pattern, utilizing this red neckline as a base of action for the move higher. Now prices punched up and closed over the April and May 2020 lows at 107.25 and 107.66 respectively, as well as the October 2024 low, but most importantly they closed up over the flatlining gold long moving average, currently 107.20. Prices also closed over a pair of 50% Fibonacci lines from the July 23 to February 25 move at 107.09 and the September 24 to February 25 move at 106.78. Now the market finally halted just ahead of the 61.8% Fibonacci line at 108.04 for the September 2024 to February 2025 move. Alright, okay, so I can't quite believe I'm saying this right now, this part of the year, but such have been the market moves here that I would keep an eye on that September 2024 high at 112.13. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, we have a number of significant resistances ahead of that, starting with the 50% Fibonacci line, the January 21 to September 22 move at 109.44, and the dark blue neckline, currently 109.49 of the July 2017 to November 2018 head and shoulders pattern. Now this 50% Fibonacci line mentioned capped a reactionary rise back in November last year. So far today, well, price is pushing up through the 61.8% Fibonacci line, but then falling back below it again, though not convincingly. Cable, aka sterling against the US dollar. A second bullish closing white Mariposa and third bullish white soldier yesterday after the earlier bullish long white Mariposa. This continued the reactionary theme against last week's weekly key reversal down, as well as the push higher from the breakout of the previously mentioned dark blue mid-January to mid-February ascending wedge pattern, which is currently 124.63 to 126.36. There was also a second clear close over the important pair of 50% Fibonacci lines of the June 2016 to September 22 move at 126.99 and the October 23 to September 24 move at 127.34, plus the flatlining gold long moving average, currently 127.86, and a November 2020 low at 128.52. Prices are now approaching the topside primary target X at 129.15 for the breakout from the dark blue ascending wedge pattern. The secondary hardest to reach target X1 is at 131 even. Just in front of target X is the 61.8% Fibonacci line, the October 23 to September 24 move at 128.99, which is where we halted at yesterday. Right, okay, so much like euro dollar, I can't quite believe I'm saying this here right now at this time of the year, but such have been the market moves here that I would keep an eye on that September 2024 high at 134.34. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, we have a number of significant resistances ahead of that, starting with a bright red neckline currently at 131.10 of the small, narrow November to December 2024 based reverse head and shoulders continuation pattern. Now so far today, a push higher up over the 61.8% Fibonacci line and reaching target X at 129.15, but seemingly failing to stabilize over either right now, and possibly looking down at the November 2020 low below right now as well. US dollar against the Japanese yen. A bearish engulfing pattern yesterday, if only just after the previous session's hammer pattern. Prices pushed back below the 50% Fibonacci line of the July 23 to July 24 move at 149.61, making the lowest close here since early October last year. Overhead, we still have the dark blue lower bull channel line currently at 151.77 of the breached mid-November 2024 to late February 2025 possible shallow bull channel. Now, as many of you are aware, I have had misgivings about this possible bull channel, as we haven't touched the channel lines enough times, to my mind, to qualify as such, so I've not placed any targets below it as yet. We also have, just before the dark blue lower bull channel line, the 50% Fibonacci line of the whole of the 2024 move at 150.76. Interestingly, below, the market pierced for a second consecutive session but did not close under the lesser Fibonacci line at 148.68, which supported the market back in December last year, leading to the subsequent rally. We also have a lesser Fibonacci a little below at 148.11, which held up prices on Tuesday. Indeed, as I've mentioned on a number of occasions previously, this region was the low back in early December last year, and was the only obstacle left from the market forming an early December 2024 to date rounded top pattern. We have now formed that rounded top, but we've chosen for now not to exploit it on the downside. Two final points. The first, I suspect, may become a big picture item, but I've drawn a bright red July 24 to January 25 bearish Andrews pitch hook on my daily chart. I may finesse it to a bearish shift, but it's a bearish Andrews at the moment. It may be that this pitch hook will show the bearish angle of attack of this market should prices choose to continue lower. Secondly, we are set up to make a weekly key reversal here. Thus, if prices tomorrow, that's Friday, close either over 150.60 or under 149.29, then we're beyond. Right now we are looking at a weekly key reversal down. So far today, a further decline, with prices pushing below the lesser Fibonacci line at 148.68 and also the one at 148.11, making a new low not seen since mid-October last year. There is a lesser Fibonacci line below at 146.69 next. Then there is the significant 50% Fibonacci line of the January 23 to July 24 move at 144.58. US dollar against the CNH, the offshore Chinese yuan. A possible inverted hammer pattern yesterday, which is a questionable pattern amongst technical analysts. There was also a second bearish black crow as well. Prices did revert back up over the rising mauve medium moving average, currently at 726.29, and influential dark blue upper trend line, currently 725.53, of the January to March ascending triangle pattern, but they soon reverted back down and closed below both of them once more. This continues to be a strong reactionary move lower to last week's weekly key reversal up. We're also now in between the bright green upper time overhead, currently at 728.61, and the middle time below, currently at 721.04 of the breach, but now seemingly repaired bright green late December 2024 to late January 2025 bearish Andrews pitchfork. Below we still have the flatlining gold long moving average, currently at 722.07, and then the May 2020 high at 719.64. Moving down to the long moving average would set up the conditions for this market to have a weekly key reversal this week. Now overall, there has been the possibility of looking at the whole late November 2024 today action as a possible double top, Eve and Adam top. Now I had previously doubted this idea, but I am now reviewing my doubts. So far today, well, a reactionary pull back upwards, but still short of the overhead dark blue upper trend line, though we're getting very close to it. US dollar against the Brazilian real. A very large bearish open and close long black Maribosa yesterday after the earlier third bullish white soldier. Prices pushed down below the March 2021 high at 588.04, capped as they were by the mid-December 2024 to date downtrend, currently at 587.44, and a nearby slowly rising mauve medium moving average, currently at 590.64. I had previously expressed some doubts about this downtrend, and it was at the time only a 2-pointer, and those 2 points were close together. However, I am now starting to reappraise my view of this downtrend. So prices punched down and also closed below the highs of October 2020 at 580.70 and December 2021 at 575.78. And most importantly, below the bright red breach, but seemingly was repaired, May 2024 today uptrend currently at 576.80. Though stopping short of testing the slowly rising gold long moving average below, which is currently at 571.38. These two, the bright red uptrend and the gold long moving average, had been the guiding prices higher here since the middle of last year. This move lower now brings back into focus target X below in the 563.35 zone, and the secondary target X1 down at 541.95 on my daily chart. These are the primary and secondary targets for the drop down from the large October 24 to mid-January 25 rising expanding wedge pattern. US dollar against the Mexican peso. A second bearish black crow yesterday after the previous session's immediate countering bearish harami. Prices punched down and closed below the September 22 high at 20.57.65, as well as the green flatlining short medium moving average, currently 20.48.24, piercing but not closing below flatlining mauve medium moving average, currently 20.35.44. Overhead, we still have the 50% Fibonacci line, the April 20 to April 2024 move at 20.99.90. That's part of the 20.99.90 to 21.05.01 congestion area. And below, the bright red lower bull channel line, currently at 20.25.09 of the very gently rising bright red early November 2024 to date bull channel, currently at 20.25.09 to 21.04.79. Now this bright red shallow bull channel has been the show running pattern here since late last year. So far today, a small reactionary move back up, but capped by the green short medium moving average at the moment.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.